Hi, everyone. Alex Wilson here. Kyle DeVigi, both broker owner, ReMax Wealth Builders Real Estate. Alex, co-founder, ReMax Wealth Builders Real Estate. Kyle. We'll jump right into the presentation now because we actually have slides about us in there. So I'm not just repeating myself. Questions that anyone may have, there's a Q&A button at the bottom. So some background on myself, as I mentioned, owner and broker record, ReMax Wealth Builders Real Estate. Been selling real estate in Toronto for over 11 years. Yes, this is a presentation on why we're buying condos in Calgary, but we do operate in the Toronto market. Number one ReMax agent in Ontario, individual transaction 2019, 2020 stats are not out yet. Number 25 ReMax agent in Canada, again, 2019, number 80 in the world, 2019. ReMax Hall of Fame, and also ReMax Lifetime Achievement Award at 35. I'm currently 39, and I also have a 1 and 3-year-old at home. But none of that is relevant to anyone on this call. What is relevant to you is that I started investing in real estate in 2012, and I turned a $39,300 deposit into a $14 million real estate portfolio, which includes 14 condos, a High Park triplex, and an apartment building in Hamilton. And of those 14 condos, in 2019, my attention turned to Calgary. And why it turned to Calgary is when you look at that deposit of $39,300. And that initial purchase, I was in the 260s. Now, Kyle, his journey was similar. He bought in the same building that I did. Those were our first investment condos. The address is 20 Minuin Mikan Way, the Carnaby building. And it has gone up substantially in value since we purchased that. I can't do that anymore in the GTA. Heck, I can't even do it in Southwestern Ontario. So it's not possible to do. So when Calgary came across my plate and the prices, I'm like, this feels like 2012 when we first bought our condos. And, does it make sense to invest here? Is there opportunity? And that's where we started investigating. And what we're going to share with you is are the results of our investigation and why we're buying condos in Calgary. So I'll let Kyle, this is the wrong one.
The other one, Alex, I can give a quick intro about myself. So my name's Kyle DeVigi. I'm a licensed sales representative as well. Like Alex said, bought my first unit, my first investment unit back in 2012 at the Carnaby and performed very well since then. I now own a property portfolio of 6 different properties with just about $4 million today and been able to put all of that together in about 8 years' time. So pretty amazing. I didn't start in the real estate industry though. My previous career was actually in lottery. So I actually used to run the lottery draws, and this ball was actually used in a Lotto 649 draw, if you can imagine that. But I got tired of people literally gambling on their future, which is why I wanted to move away from the lottery industry. And that's when Alex and I founded ReMax Wealth Builders so that we could help people actually build a pension using real estate and create generational wealth.
Yeah. And again, what we originally did in 2012, again, can't do that in Toronto, GTA, again, Southwestern Ontario. And what I mean by that is that small amount of capital, which could really result in some substantial gains into the future and be cash flow positive. So what I start off with, now someone asked in the Q&A, and I will address this. We're probably looking at about 45 minutes for the presentation. So if you want to get an idea of how long this will go. And again, I'm telling you, amazing stuff in here. So this is my whole portfolio. This is everything I own. I'm very transparent with it. Current market value of it is almost $15 million. But I don't care about that. I'm like, what's my value going to be in 30 years? And it's going to be $36 million. And why that is, this is my pension fund. I built my own pension fund. And I go deeper into that. So $36 million, why I looked at over 30 years is in 30 years, all the mortgages will be paid off. And I will own all these properties outright. And I didn't put any money in. Well, I put my initial deposits down, but eventually you refinance and they start building up on their own. But throughout this whole time, the tenant, someone has been paying all that mortgage amount down. It hasn't been me, it's someone else. So by the end of this, the gift to me, or the gain to me, is that I have these fully paid off properties. And what does that mean if that's $36 million in 30 years, well, what does that mean realistically in today's dollars? Because $36 million in 30 years, my background's in economics and finance, that doesn't actually mean $36 million in purchasing power. So what purchasing power that is? Well, if I look at inflationary pressures and everything like that, that'll actually be $21 million in 30 years. And again, we look at 30 years, real estate is not about instant gratification, but I show this because real estate has the ability to generate you substantial wealth in the long run. So don't look for the small little hits, look for the long run growth. And what does this result in? Well, I wanted to show you how small actions today can generate you significant wealth into the future. So we looked at what my portfolio is going to be worth in 30 years, be worth nearly $21 million in today's purchasing power. But what does that mean in regards to how do I live off of that? Well, if I applied just a 5% rate of return in 30 years, then I'd be looking at generating income over $1 million a year. And if I want to reinvest that to have that portfolio living forever, in essence, to help my family or to protect it for myself for inflation, I reinvest 2% of that 5%. I get $624,000 a year in today's purchasing power. So whatever that value is in the future, that's in today's purchasing power. I get that per year. Can I live off $624,000 today with no expenses because everything's paid off? Yeah, you can. Now, this may seem like, oh my God, like how am I going to build a $14 million portfolio? But I break it down into smaller bite size. You can 100% easily build $1 million portfolio. You can do 2, 3, 4, 10 million. These are all achievable things because what I've been telling people is there's nothing special about Cal and I. Sorry, guys, there's nothing. I'm from a small town in Northern Ontario and he's from the big city of Sudbury. I had to be bussed into his high school. We've known each other since high school. This is all stuff, and that's why we preach real estate. This is all stuff that anyone can do. You buy the roof over someone's head, someone gives you money to live in that property, and then in 30 years that property is paid off. And what I applied in my portfolio is a compounded annual growth rate of 3%. Nothing crazy. The true value in all of this is time, not the actual dollars. So time is your valuable currency in this, and it's long, boring, but it pays off. So this is actually my favorite slide because it shows that anyone can do this, whether you want to build a $1 million real estate portfolio in 30 years in today's purchasing power, that'll give you $70,000 a year or $42,000 if you want to have a sustainable income coming out of that. All of it's this doable. You can do this. You're building your own pension fund. So why I start with this is because I want to show you the whole reason why you're investing in real estate so you understand why Calgary. So why Calgary? We started looking at Calgary, as I mentioned, in 2019. So this is what we discovered when we first started doing our analysis. Well, it's the number one most livable city in North America for the last 2 years. I had no idea. Didn't know that. Fourth most livable city in the world. The top 5 in the Economist Intelligent Units Global Livability Index. I do know it's located in the foothills of the Canadian Rockies. So you literally have a worldwide destination at your doorstep, tons of green space, and it has the second lowest cost of living in Canada. So number 1 most livable city in the world, second lowest cost of living in Canada, 9th lowest in North America. So it's a great place to live and it's an affordable place to live. So when I hear that, I'm like, okay, well, that's interesting, especially in COVID and post-COVID times as people are looking at, well, do I actually like where I live? Is there somewhere else I can live and still do my job? That's where Calgary becomes a really attractive place with its affordability, where I talked about how expensive Toronto is, and Vancouver is even more expensive than Toronto. I thought we were more on par than it was when I looked at it. And then Calgary is so far away in regards to valuations. We're going to see people moving there, and we are seeing people move there, which you'll see in future slides. Also, it's the sunniest city in North America, 2,300 sun-filled hours. Incredible. Great vitamin D in the city. Extensive outdoor path network for biking, running, rollerblading, the largest in North America, and ranks second for the healthiest lifestyle in all major cities in Canada. These are all great things, making it an attractive destination for people to live. And then the city, outside of the city, and I went over this presentation with people that live in Calgary that relocated from Toronto that are working there in the tech industry, believe it or not, which we'll talk about more. And they're buying one in here. And they're like, yeah, Alex, like Banff is an hour and a half away. We 100% agree with you. It's not like Muskoka where you got to wake up at 4 a.m. just to get an hour and a half or 2 hours in Muskoka. You can drive there and be in Banff and be in the Rockies and play in the Rockies, world-renowned national park, world-renowned ski resorts, basically at your doorstep, an hour and a half drive away, a true hour and a half drive away. So now it becomes, okay, yes, this sounds like a great place. So still got to fix that slide. So why is Alex and Kyle investing in Calgary? Well, we looked at it's an attractive place to live, but that's not a reason to invest in the place. We got to find out why we expect to see growth in the valuation. So first of all, we are in the business of selling roofs over heads. So if we're selling roofs over heads, that means we want to look at the population growth. Now, this slide also needs to be corrected because I get some recent stats. The net population growth per year for Calgary is now over 20,000. It was over 20,000, nearing 29,000 in 2020. So unlike Toronto, which saw an exodus, which again, I'm not worried about Toronto, that is a temporary item. Calgary saw a net population growth and over 20,000 people in 2020. So we see that there is population growth happening in Calgary, which is good because we need more people that require more roofs over our heads for the values to go up. And Calgary also has the highest millionaires per capita, so they have money. And Calgary also has the highest wages and salaries per employee in the country at $66,000. So not only do they have a large proportion of wealthy individuals, their bottom is quite high, the highest in Canada in regards to salaries and wages. So these individuals can afford higher housing prices and they can afford higher rents. So again, okay, these are positive things. And then you want to look in towards the future. So how is population going to be driven in the future? Well, Alberta is set to have the highest growth rate in Canada for population. These are stats from Stats Canada. So over the next 22 years, the Alberta population will grow by 48% versus Ontario's population, which is set to increase by only 24%. On top of that, so we're double the growth. Alberta is double the growth of Ontario. And on top of that, if we look at the numbers in British Columbia to Alberta, so British Columbia currently has a higher population than Alberta. But over the next 22 years, the net difference between the two is over 1 million people, to the point where Alberta will go for having less than 600,000 people in BC to having more than 400,000 people in BC. So you're seeing significant growth that's going to be happening in Alberta. So again, with this significant growth, it's going to require more roofs for more people that are coming into the province. So we look at the population growth, important things.
And that population growth is mind-blowing, Alex. That's a 48% increase in 22 years. That's not a long time.
Not a long time. No. We both turned 40 this year. It's amazing. half our lives, which that we've lived currently so far. It's not a long time. These last 20 years have flown by. So then we looked at the money. So these people got to work, right? So if we have all this population coming in, is there the money to pay these people? Well, let's look at GDP output. So the gross domestic output. You got the big three on top: Toronto, Montreal, Vancouver. And then you have Calgary. Calgary's number 4. We've seen tremendous growth in pricing in Toronto, Vancouver, and Montreal. Montreal more recently on the condo side. But over recent years, we've seen significant growth in the values of condos. Calgary is the next one on that list. When we look at the GDP output of Calgary, the GDP output of Calgary is greater than the GDP output of the whole province of Saskatchewan and the whole province of Manitoba. So it has larger GDP output than entire provinces in Canada. So the money is there for Calgary. The economic activity is there in Calgary to be successful in the future. And then we follow the money. So the builder we work with in Calgary is Minto. Now, Minto has been around for 60 plus years. Originally started in Ottawa, moved to the GTA. So they have substantial presence in Ottawa, substantial presence in Toronto, GTA, and as well in South Florida. And they've recently started developing in Calgary. They have over 1,100 employees. They have over $4.1 billion worth of real estate under management. And the Greenberg family, the founding family, is also worth over $1 billion. Why I talk about all of this is I have a very well-funded builder, which is important to me because I want to make sure the builder is going to be around if I'm investing in it. A very well-funded builder that has 1,100 employees, analysts on staff, looking where can we deploy more capital, where is the next opportunity, where can we make money, where should we be investing, where should we be building? And they've been buying and investing now and building in Calgary. So yes, we did our research, but if a big builder that's worth $4.1 billion is building in Calgary, they see something, we're going to follow them too. So it's following the money, being the first mover in. A great line I heard last week or 2 weeks ago, and I got caught up in it. I bought some silver, and I immediately lost 10% in my stock value on that. And again, it was play money. I was just, I got caught up in the media. But a great line that I heard later that afternoon, once I had lost my 10%, on the radio, was that once you hear about it, it's already too late. And you're not hearing about Calgary now, but when we look beyond the headlines and we look at the activity that's starting to happen, that's where you start to see there is opportunity there. Because once you hear about it, that initial gain is already gone. Now, the good thing is that the real estate market doesn't operate like the stock market where I'm going to lose 10% instantly in one day. But once you hear about it, that means that initial opportunity is gone. Just like we've seen in the Toronto real estate market, where Kyle and I were saying, you should buy. We see great opportunity. That was in November. Those opportunities gone. The condo market has picked right back up. I was in multiple offers this weekend. There's still room to grow. Don't get us wrong. There's still great opportunity out there. But the idea that you can stab someone with a spoon and turn it, those days are gone. You can't. There's no more lowballing people out there. The lowballing days are gone. And we get them, Kyle. You get them daily, I'm sure, like I do. Hey, get me a deal out there in the Toronto market. Deals are gone. So now you're just relying on natural appreciation of the market. And there's still a gap. But that initial going, hey, I can lowball someone, that's all gone. So if you look beyond the headlines like we're doing and going, seeing some positive signals, you want to get in before everyone else. So there are people that made the bump on silver that one day, but it wasn't me. They made my money. So we invest with Calgary. We're Minto. We are following their money, and also because they care about their brand and their reputation. They're entering a new market. They're really going to be motivated to come along with a strong brand offering because they're establishing themselves in a new market. So these are all important things to me when I'm looking, and Kyle, when we're looking at this new market and this new opportunity. So buy low, sell high. That's number one, what we're looking at. So new condo sales prices have dropped 21% since 2017. That's fantastic. That's great. And I start that off with the article from Warren Buffett. This was from actually last year. And Warren Buffett made an investment in a pipeline, $9.7 billion. I think his first oil and gas investment in over a decade. And why that's relevant is he saw value last year in the distribution of oil and gas because he knows it's still going to be moving forward in the future, and he bought low. We see the same opportunity for Calgary. It's already bottomed out. The job cuts that related to oil and gas, those already happened. Those happened a while ago. You will see some additional layoffs that may happen in that space, but the heavy shedding already happened. That's already done. So these industries are already running efficiently, the backbone that we like to call it of oil and gas in Calgary. So the heavy shedding is already done. We're looking at the buy low opportunity because we see net population growth occurring in Calgary, and we see the GDP output that is available in Calgary. So you're buying low. You don't want to buy in the hot market. You want to buy in the low market that has upside into the future. That's where we see the opportunity, the buying low side in Calgary. And the big elephant in the room, or what I always get, and what we got as soon as it happened, as soon as Keystone was canceled, like, Alex, oh my God, what's going to happen? It's completely irrelevant. If you watched any of my webinars or our webinars from 2019, I never once brought up Keystone. And once it actually got canceled, I did some more research. Here's the thing. It's all about distribution of oil. And you may be going, well, Keystone was distribution of oil. It is, but it's distribution to one country, our biggest customer. And we already have enough capacity to service that one customer. In 2020, 3.8 million barrels of oil went to the US. And by 2025, they're expected to require 4.2 to 4.5 billion barrels of oil. Well, we currently have capacity for 4 million barrels of oil to Calgary, and not to Calgary, to the United States. And because Keystone was already canceled in 2015, this already happened once. It's not a surprise. There were other pipelines that go to the States that are already increased their capacity, so will meet their needs already for 2025. That's already built in. So Keystone wasn't even needed. It was actually going to be surplus pipeline going to the US. The US isn't the issue. If you look at the line here, in 2020, Alberta oil was selling per barrel at points for 50% less than Texas oil. It's because Alberta is landlocked. They have an oil distribution issue. You can't easily get the product out of the market. What does matter is the Trans Mountain Pipeline, which is a tripling of that current pipeline, that's the Trans Mountain, which will lead to a 14% increase in the total capacity for pipelines in Canada, which will then go to international markets and will raise the Canadian value of oil. We don't need the overall value of oil to go up. We need the value of Canadian oil to go up, which typically sells at a discount to the worldwide oil price because of distribution issues of the Canadian oil. That's what matters. So when you look at the Trans Mountain, that's the one that's key. That's the one that's finishing in 2023. And as Canadians, we all own that pipeline. So from a distribution perspective, that's the one that matters. And that's what we're all excited about. And that's going to be a huge boon to the Calgary economy when it completes in 2023. Anything you want to add on that, Kyle?
No, I think you covered it, Alex.
And I just read my other note. If this pipeline, the Trans Mountain, actually is a pipeline of strategic importance. Why is strategic importance? It's actually 100% Canadian owned and 100% on Canadian soil. And because the federal government has interest of Canadian oil doing well, Alberta has interest in Canadian oil doing well, and everyone on this call has interest in Canadian oil doing well, you know that one will go through. And because it's a strategic importance, everything that is required to happen will require to happen with that. There's not a foreign power that's going to impact the result of that pipeline. So these are the positive news things that you're looking about. But what sells newspapers? Shocking news, bad news. So you got to look beyond the headlines. So that's distribution. Now we look at diversification. So we've talked about oil and gas being the backbone of the Calgary economy. So the Calgary infrastructure was built on $100 oil. Early in the 2010s, you had record high levels of oil prices. You had a development boom in downtown Calgary, and you had all this beautiful office space built up. But the issue, then the bottom fell out of the oil prices. So then you led to record vacancy rates in the office space in Calgary. But the only reason you have record vacancy rates is because you had a boom in oil price and you built all these office towers. But that's a great thing for us investors because we didn't have any money in Calgary at that time, so I didn't lose anything. But we had all this beautiful office space get built. Now, what does that mean? Well, now we have a very, very high vacancy rate of 27% and low cost office space in Calgary. Now, Calgary is ranked in the global top 10 most attractive cities for workers. So as we mentioned, great place to live, also a great place to work. And Calgary has the highest proportion of STEM graduates of major Canadian cities, degrees in science, technology, economics, mathematics. And what we're going to show you is the tech boom is already here in Calgary. So because you have this low cost office space now and this infrastructure that $100 oil built, oil isn't going anywhere. There'll always be an income stream coming in from oil to Alberta, which is going to help the overall economic prospects. But now you can build off of that and diversify into other areas. And we're seeing that with tech in Calgary. It's home to 435 technology companies. 3/4 of these are startups. And there are more than 2,000 open tech jobs in the city right now, and a record 44,000 Calgarians are working in tech right now. Why is that relevant? Well, again, we talk about the low rent. So 3/4 of them are startups. So that means they're cost sensitive. They're always raising money. Every dollar spent counts. The office space in Calgary is incredibly affordable. It's only $17.50 per foot. When we compare that to even Edmonton is 23% more for office space than Calgary. Toronto is over double at 102%, and Vancouver is over 155% more. So you have this low cost environment for these tech companies to operate office space. You have this low cost environment for these workers to live, and you have one of the best cities in North America to live in from a quality lifestyle perspective. Now your head starts going, okay, maybe there is some positivity that's going to be occurring in Calgary. Remember, the $100 oil built the offices that tech industries can now use to thrive. That's key. That's just following the progression down the line. And as I said, the tech boom is here. So there are now Calgarian companies that are achieving unicorn status. What is unicorn status? Unicorn status is they achieve $1 billion valuation. So one of the most recent ones, Benevity. If you look at the date of this article, December 4th, 2020, received a valuation of $1.1 billion when they sold a large majority stake in their company. Now, why is that relevant? Well, they're not the only unicorn company. We had Solium Capital sold to Morgan Stanley for $1.1 billion in 2019, and then medical research firm Parvus Thermopeutics They had $1 billion valuation. So you have, that's $3 billion valuations right there that have happened within the last two years in Calgary. And now people start circling, and venture capitalists are now looking at Calgary as like, well, where is the next unicorn? Where is the next startup that I can invest in and make a return on my investment? I'm calling it the unicorn effect. And what also happens is so you have these success stories that happen. So now you're going to have more people looking into the Calgary market. Then you also have the original founders of these companies. Well, they're going to be reinvesting their monies back in the Calgary market because they know all their colleagues that are working for various startups or have different startups going on. They're like, okay, well, I know Jim over there. You know, he's got a good idea, good product, good team behind him. They need some capital. I'm going to make an investment in there and double down on my investment. That's what starts happening. So you have this capital start rolling in because they see these success stories, these unicorns happening. And these unicorns started happening in 2019. So now you have a tech industry that, as we see in this article, punching above its weight when it comes to attracting investment capital and high value deals to its tech sector. So as these success stories continue to pile up, you're going to have, the high profile nature of these will help open the eyes to other deep pockets to find out what's going on in that technology space. You're going to have more and more people start looking at it. You're going to start seeing positive headlines in the Calgary market. Let's talk about positive headlines. I'm going to pull up one right now. Actually, I'm not going to right now. I have to show one more slide before I do that. Well, actually, no, I can right now. I'll do it right now since I have this opened up.
Success begets more success. So once
thank you.
One successful company, it's almost an incubator effect. Just draws more and more people there, which then adds more success and draws more people there, and it compounds and builds on itself. So here we go. So you're going to see in the next slide or two, I actually talk about this company. I've been talking about Simon since January. And look at this, Globe and Mail. This was in the paper yesterday. This is what I was all excited about. Just raised $43 million, hires hundreds, brings hopes of a tech revival to the depressed oil patch. This is happening right here, right now. This is exactly what I said. This is the positive news article in the Globe and Mail about Calgary. Mind blowing. Okay, this is where I'm saying you got to look beyond the headlines, beyond oil and gas. And if you look at my past presentations, you're going to see it on the next slide. I can stop sharing this now. Sorry if I'm getting all passionate and excited, but this is something I said. This is actually happening. So let me go back to screen share. Sorry, guys, I only have one degree. Kyle is the one with the tech degree. Where's my slideshow? There it is. Okay. Back to the slideshow. So let's see what my next slide is. There it is, right there. This slide has been sitting here since the beginning of January. So had fewer than 20 employees in spring of 2019. Today has more than 200. They're moving into 79,000 square feet of office space downtown, that affordable office space that Calgary has to offer, and looking to hire an additional 200 to 300 people in 2021. So I found this in my initial investigation, and then boom, there you go. You get a news article in the Globe and Mail. They've just secured financing to continue to grow. Because as these high profile nature success stories happen, like the Benevides out in the world, these unicorns, again, venture capital will start seeking out these other startups and start investing in these other startups. Who else is in startups that are taking up more office space? Halcyon officially outgrew its space in suburban industrial park. Now they've moved downtown. They've gone from 3 staff to 68, plan to go to 150 by 2021. They just signed a lease for 20,000 square feet in downtown Calgary. LodgeLink will require 300 new technology-based jobs in the next 5 years in Calgary. And then on top of that, 300 non-technology jobs they will require an additional 50,000 square feet of office space in Calgary. These are my examples of tech companies that are actually taking advantage of the excess office supply in Calgary. It's also getting worldwide notice as well. So you have ESQ's new Canadian subsidiary called CloudX Technology.
they've just signed leases in Calgary. They out of all Canadian cities, they chose Calgary as the place that they wanted to open their head office. Here's the thing. You're not going to get the Amazons and Microsofts into Calgary. But what you will get is the second tier companies coming in, the startups coming in, because of the low cost environment that Calgary can have to offer. That's where it starts. And the startups, the low cost environment is absolutely critical for them. And if you look at the low cost environment also for the employees who get to work there, it's a win-win. So another time for me to stop the share. So because I know the next slides that we're getting into, companies will start moving away from Vancouver and Toronto, and they're going to start moving to Calgary. And here we go. So in the next slide, I'm going to talk about how I know that this will happen. Maybe I'm a little preemptive on showing this article, but I get so excited because throughout January, I said, okay, look at what's happening in Silicon Valley and California and companies moving to Texas. Why are they leaving California and moving to Texas? There are a number of things that we're going to go on the slide. I said, if you look at that, you can expect to see the same thing happen in Canada, because a lot of the items that exist in Texas also exist in Alberta, which we're going to get into. And then boom, last week, tech firm moves headquarters to Calgary from BC. Another sign of the city's future growth. Another positive news article about the tech industry happening in Calgary. And again, I was blown away. I was like, oh my God, this is exactly what I was talking about. So mCloud Technologies, which uses artificial intelligence and cloud computing, are going to be moving their headquarters from Vancouver to Calgary. Now, why are they doing this? Let's go back to my presentation. Why are companies leaving Silicon Valley to Texas? First of all, fleeing high taxes. Well, guess what? Alberta has the lowest corporate tax rate in Canada. There's also no land transfer tax or development charged in Alberta, and there's no provincial sales tax. So they have the most favorable tax environment. Alberta has the most favorable tax environment in Canada, just like Texas has an extremely favorable tax environment compared to California. You have companies moving from a high tax environment, one of the highest in the US, to one of the lowest tax environments in the US, being Texas. Number two, expensive housing. California has incredibly expensive housing. This is where I bring Kyle in. Kyle, does your wife work for a large multinational pharmaceutical company that's headquartered in San Francisco?
Yes, she does.
And now I know she's in global regulation, but before she was American regulation. So literally the person that was in charge of dealing with regulators in the States, correct?
Yep, exactly. She was out of Mississauga and dealing with the FDA and US regulations.
And has she ever lived in the United States?
Nope.
Did she go to school in the United States?
Nope.
So you have a Canadian that's working with the FDA to get drugs approved, or working with the sales and marketing teams to make sure they're not saying misleading things, living in Canada.
Exactly.
And why is she living in Canada?
Mainly because of cost. Because her salary in Ontario and Toronto is much, much more affordable than someone in San Francisco Bay Area or in Basel, Switzerland, which is where their other offices are located. But you're still getting a very highly educated person that has training and is also in, a great time zone as well to be able to work with different geographical areas.
And that's exactly it. So you look, so you have these employees that are in other locations, and now you look at, well, how can these employees live? Well, where are these employees going to live? If you have this expensive housing in the San Francisco Bay Area, literally you have people living on couches because they can't live anywhere else because they either can't afford or can't find a place. In order to have a well-run company, you got to have well-fed, well-rested employees that have some sort of affordable lifestyle. So you look at the extremely high cost of living in California, but you look at the low cost of living in Texas, companies are like, well, maybe I should move my operations there. What about Calgary? Same thing with Calgary. Second lowest cost of living in Canada, 9th in North America. So you have incredibly affordable housing. And then government regulations. Well, the Alberta government has been very proactive with their post-COVID recovery measures in already signing a $10 billion bill, which allowed them to reduce their corporate taxes to attract a diversification to the economy. There's also no rent control in Alberta, which is attractive to investors. They've also recently made a $175 million contribution to the Alberta Enterprise Corporation for Innovation. They are going in and helping to attract and build these companies, help build this industry up and make it successful. And that's where I get excited, where I see these news articles going, hey, look, I said this in January. Look, now in February, there's a company moving from BC, a tech company moving from BC to Calgary. It's starting. Then I see, wait, I talked about this company in January. Now they just secured new funding and they're going to hire more employees. I was talking about that. That's amazing. Look beyond the initial negative headlines and dig deep, and you're going to find the positive stories where you're going to start to see growth. And then we talk about we just talk about the companies that have left California. You have, when we see leave, they still have operations in this area, these areas, but now they're all expanding operations into Texas. You have HP with 60,000 employees worldwide, Oracle, 135,000 employees worldwide, Tesla, 43,000 employees worldwide. You have Elon Musk that just moved there. Dropbox, their CEO just moved to Texas. These are the trends you have to follow. Remember, my background's in economics and finance. I took advanced econometrics. You're looking at the stats, the migrations, the patterns of what people will be doing in the future. That's what we're looking at. And this is where we see some great positive signs of why Calgary is going to boom into the future. And I love this one when I came across this. So when you look at net financial debt in Canada, in regards to the citizens in their provinces, Alberta by far has the lowest. We talk about that backbone of oil and gas. Alberta is set to still prosper into the future. Yes, that revenue stream is not as great as it used to be, but what it allowed them to do is have an incredibly low net financial debt per capita. Now that number is going to grow. That will have the highest growth rate in Canada. Alberta will pile on the debt faster than anyone else in Canada. But they should, because they can. They can make these investments that other provinces can't or may be more constrained to. If you look at Ontario's, it has nearly $19,000 of net financial debt per citizen. If you look at Alberta, the exact number isn't there, but that looks lower than $2,500 to me, with the average in Canada being $10,000. So they have the ability to spend to make investments in other industries to allow them to prosper into the future, which will attract new companies and new growth into Calgary. It's incredibly exciting. So you got to look at where the money is and where people have ability to make, or the province has ability to make investments. And then when we look at overall the diversification of the Calgary market, again, you got to think beyond oil and gas. Oil and gas now combined with forestry, fishing, mining, quarry, it's only 49,000 jobs, 6.5% of the population in Calgary. They are diversifying their economy. So again, oil and gas will always be there. And remember, and Kyle and I have talked about this before, we're both from Sudbury, which Sudbury used to live and die by nickel. It's the largest source of nickel in the world. So it's a very commodity-based city. But over the decades, it's not just years, decades, it's diversified away from relying on the price of nickel. Kyle, what is Sudbury known for worldwide now, beyond nickel? Everyone's going to say nickel, but what is Sudbury known for beyond that?
Yeah, really two pieces. One is expertise in the mining industry. So everything that we learned, we've been able to package it up and now sell and help other companies that are mining internationally and around the world, manufacturing equipment, teaching them how to use it, different methods, and those sorts of things. And again, on the educational side, Sudbury is known for education. There's a college, there's a university, there's a French college. It's really the hub for entire Northern Ontario for education and the surrounding communities. So it's really diversified away from just nickel mining shovels in the ground.
Yeah, and that's where Calgary would go. The knowledge that they've gained by being major energy producers doesn't stop. Will we still require energy tomorrow? Yes. It just may come in a different form. They are experts in energy financing. They are experts in energy development. These are things that can be transferable worldwide into the future. They are the experts in building oil efficient construction in regards to development of these sites, because of Canada having, from a global regulation level, we are not a third world country with no environmental regulations. Calgary is a worldwide leader in regards to environmental regulations in dealing with an environmentally negative asset that they're dealing with in regards to the oil sands. So there's these technologies that spur more technologies that allow Calgary to become experts worldwide, and they're able to sell that expertise worldwide. So that happens as well with the tech industry. So you got to look beyond that initial commodity price of worldwide oil. There are solutions that are being put in place to propel Calgary in the future. And that's where it's typically been a boom and bust economy. If you look historically, it's boom, bust, boom, bust, boom, bust. We are now exiting the bust portion. We're seeing signs of life in Calgary. So we're exiting the bust portion. I'm not worried about the price of Calgary going down. I'm not worried about the price of Calgary real estate going down. I have positive population growth. I see positive signs in the economic forecast. The province is going to lead population growth over the next 22 years. I'm not worried about the value going down. It only points to going up in the future. So what's my risk? I don't really have much risk. My only risk is it may not go up as fast as I want it to. I just got to wait a little bit maybe. But I'm not worried about it going down. There's no downside risk in Calgary. So we've looked at it, we've waited. Now we're waiting. Now we're anticipating the future boom, which we're seeing the beginning signs. And that's where we buy pre-construction. I don't want to actually own a physical asset in Calgary right now. I want to lock in the opportunity to purchase that physical asset in the future. So the investments we make are in pre-construction investments that aren't going to be ready till 2023. And then also we have leaseback guarantees from the builder as well. So these give me another 5 years from today for that Calgary to hit that boom territory. And that's what's key. So talking about these things that we invest in, we're able to buy in these properties with 5% down. What that means is, which are purchase prices, which are, depending on the development, could be in the low twos or low 300,000s. We're looking at initial deposits anywhere between 11 to 12,000 to $15,000 to $20,000, very reminiscent. Well, it's even less than our initial deposits when we bought in our first investment condos, but it's that low deposit environment that allow us to get in. These projects have the ability to assign units if we want to sell them in the future, though I don't recommend ever doing that. But you have an exit clause. You get the 2-year rental guarantee, including full property management. So these projects are fully managed for you, and the builder is going to lease them back at a set rent. All the units are cash flow positive with the rent guarantee that the builder provides. And then from a closing perspective, it's the most favorable tax environment in Canada. There's no provincial sales tax, so no HST. There's no development charges or other closing costs, just your legal fees to close. And there's no land transfer tax. There's no provincial land transfer tax or municipal land transfer tax. So it's an incredibly affordable environment and favorable tax environment to invest. And then when I look at the leaseback example, and I do this to show people that these are units that I actually bought. So I have my unit at Era. Right now, we're just finishing up Era 2, nearly sold out. Just a couple units left. I look at my price, paid $389, $529. My leasebacks based on the purchase price at 6%. So they're going to lease back my unit at $1,855. When I factor in mortgage, property tax, maintenance fee, it'll be cash flow positive $265 per month. I can't do that in Ontario. When I look at my unit at East Hills, $270,900, which was a southeastern location. The other one was a downtown location. Leaseback on this one, $270,900. When I factor in my leaseback rent, it'll be $1,467. When I look at mortgage, property tax, maintenance fees, I'm cash flow positive, $218 per month. These are incredible numbers that I'm able to lock into today. And I'm like, why wouldn't I buy in Calgary? That's a conclusion I came to 2019 and Calgary and Kyle came to in 2020. So then we have our capital outlay. So we're only putting 5% down. I don't need the property to go up to double my initial investment. So in Era, I put less than $20,000 down. So if my property goes up $20,000, I've doubled my initial investment. It's 100% return. East Hills, I put less than $15,000 down. So if I go up $15,000, I've doubled my investment, my initial return. I'm expecting them to go up more than that, but I don't need large gains to really do well in my initial investment. So when I look at the capital outlay, I don't need a lot of appreciation for the investment to do incredibly well. And then when I look at the pro-investment environment, no rent control, as I mentioned, no foreign buyer tax in Alberta, no land transfer tax, no provincial sales tax, no development charges, and the recently signed $10 billion stimulus package, including reducing corporate taxes, which is going to be the favorable tax environment for corporations to start moving employees and offices to Calgary. That is where I see tremendous upside opportunity. The recent successes, so Era, we sold out 180 units in 3 months in 2019. That was the first project I bought in. Annex, we sold out their initial investor release, 40 units in 2 months over summer of 2020. And then East Hills, which was the most recent launch, we sold all 87 units in 2 weeks in November 2020. And we're currently working on Era 2, which was a 40 unit release, a building which will be going beside Era 1. And we only have a couple units left on there, and we'll include that in the summary email we send out to everyone at the end of this. So I'll open it up to questions now. I noticed we got a few in the Q&A box, so let me open that up. Okay, these numbers are great. So this is from Key10, this is a number, this is a question in regards to my initial analysis of my portfolio. These numbers are great, but do not represent cash in hand. Your example is more indicative of dollars on paper, not necessarily in your hands, largely because there is mortgage and property tax and maintenance fee, which need to be accounted for. Yes, Key10, doesn't matter though, because I'm not selling my properties. So you got to look at owning and holding real estate over the long term. My property tax, maintenance fees, and mortgage are covered by my tenant rent coming in. And then in 30 years, there'll be no more mortgage payment. So what you got to think of is if I just had a pension fund, I apply what rate of return do I want on my pension fund? So if my portfolio is going to be worth $36 million or $21 million in today's purchasing power and apply a 5% rate of return on that, what's my 5% rate of return on $21 million? And that's what I came up with. I don't need to leave in 30 years. I don't need to leave it all in real estate. I can start diversifying at that point and putting in other investment vehicles. But over 30 years, I grew substantial wealth by holding on to those assets while someone else paid them down. And then in the future, I can choose to do whatever I want with them. Are these condos downtown Calgary easy to rent out now that everyone is working from home? Yes, yeah, there's no issues renting out. But again, these condos come with a full lease back from the builder. So you don't even need to worry about renting them out because the builder is going to handle all of that for the first 2 years you own the asset. So you're not worried about renting the property realistically until 2025, 2026 because of build time, these projects completing in 2023, 2024, and then 2-year rental lease back. So 2025, 2026, that's when you're going to be renting out the properties. Where are the jobs in Calgary compared to Toronto? What is the benefit to invest in Calgary? Has very less jobs, only oil and gas industry can't do much. I think we already discussed that there's a significant diversification that's coming to the Calgary market in the tech industry, over 2,000 open jobs in the tech industry in Calgary right now. continuing on. What's the next project coming in Calgary in the low 200s, 5% rental guarantee with Minto that is being advertised? Well, right now we're dealing with the Era project, which we're just finishing up right now, which is nearly complete. And everyone is going to be getting a summary of this. Okay, great question. In order to get a mortgage, is a total of 20% down required? Okay, so great question. So these opportunities that we present themselves, you're paying 5% for the pre-construction opportunity. When you actually get the property, when you close on the property, yes, unless you're closing all cash, if you're going to get a mortgage on the property, then typically you're going to have to put 20% down unless you're moving into the property. So yes, at one point you're going to have to come up with 20% down. That's what investment properties require, but you're able to invest in them initially for 5%. Now, the next part of the question, and if you're an out of province investor, is it more difficult to get a mortgage? Absolutely not. Financing is national, not provincial. So no issues getting a mortgage there. Annex, which we sold all last summer. We have people's closings right now, and there have been no issues with mortgages. How does financing work on a pre-development? Can I buy an investment property if I don't own a property in Canada? Yes, you can. In these, I know what that question is relating to. You're relating to the travelers insurance package. You don't need the travelers insurance package for deposits for this project and the other projects we're talking about. So you can reach out to us directly on that. But no, you don't need to own a property in Canada to invest in this with 5% down. And I'll open the chat because I just noticed things there. Is there a project with occupancy in 2024? I think we'll have one coming up in March that will have an occupancy in 2024, I think. But again, anyone that's on this list will get this full summary, and will then be on the email list for future Calgary projects that we are inviting people to invest in. And then if I pay 5% today, when do I owe the 20%? When the building is complete, and that is going to be the current project Era is expected in Q1 2023 or Q2 2023.
Down counts towards the 20% total.
Yeah. Ken, yes, the Era is in the 200s with the two-year rental guarantee. So we'll finish this up right now. As I said, you will get a recap of all of this. That'll be emailed to everyone. You typically get that tomorrow. Thank you, everyone, for attending. And there'll be an opportunity to book any direct appointments with either Kyle or myself when this recap email goes out. Thanks again for everyone attending, and looking forward to talking with everyone. Talk to you later. Bye-bye.